Hey everyone, I'm James Bowerman with the Real Creative Group, and with me today is my close friend and colleague, Armen Manokian. For people who don't know Armen, why don't you introduce yourself?
Like James said, my name's Armen Manokian. I've been a mortgage broker now for 8 years, and I truly love what I do. We always do what we can to go above and beyond for each and every single client.
All right, so let's start off with talking about the current market. I know what I'm seeing. I'd love to hear kind of what you're seeing on the mortgage side, specifically working exclusively with buyers, and what you're seeing your clients kind of running into.
So right now we're seeing very low inventory, as everyone knows, and that kind of causes a ripple effect for buyers and what they're trying to find and what fits their needs for their family and themselves. So one of the things that I always mention is being prepared as you possibly can be. Some clients, they want to wait to be fully pre-approved, which is understandable. It's different from case to case, but other ones get pre-approved way ahead of time. The perfect house pops up on a Sunday and they're ready to make the offer. Versus if you're not pre-approved, you're not prepared, that perfect house comes up, you might miss the window of opportunity to be able to get that for you and your family.
Yeah, for sure. Things are going to be moving very quickly, as they have been over the last really few years. So what specifically, when it comes to being prepared, do they need to have ready, and how long does that take to get your pre-approval done?
So our pre-approval doesn't take very long at all. We try to be as thorough as we can early on in the process. Just for an example, if you're a borrower who works a salary job or hourly job, more than likely you get a W-2. Typically we need a 2-year history. So just to simplify it, 2 years of your W-2s, 1 month of pay stubs, 2 months of bank statements anywhere you're coming up with your down payment or cash to close, and your driver's license. That's the simplest way to break down what we need. And obviously we'll need to check your credit to make sure your credit is in line with the product that you're trying to qualify for.
So overall, it kind of comes down to how quickly they can get those documents together and get them over to you.
Yep.
What is it, like a day or two maybe?
Yeah, I mean, if a client gets us everything that morning, we'll have a pre-approval letter out that day. Obviously if they get it in after hours, if I have time, I'll be able to do it that night. If not, you'll have it first thing the next day. So we try to, take pride on our team of trying to do it within 24 hours of when the application is completed.
I think the other added benefit to that is you can eliminate surprises, right? So, I think, I make good money, I think this or that, but maybe you have a chance to maybe catch something, identify. I know you mentioned before about like an old medical claim or something like that, where you can say, well, let's nip this in the butt now, and it won't pop up later and you're fumbling to get things to the finish line.
So I'm glad you mentioned that, because recently we were able to rescore a borrower. We pulled credit. Credit was just under a 700, and he told us the whole time he had perfect credit, 800 credit scores, and sure enough, he had a less than $200 medical collection on his credit. Didn't even realize from one of his kids. We paid it off, got it removed on his credit, and the score is back up to the 800s. Now, in that case, that's a one-off, might not happen like that all the time, but this little extra step basically saved him almost $200 in his payment because of the difference in his credit impacting his interest rate.
Well, that's a good segue then to the interest rate conversation. Now, I've noticed, in my last market update video, I'm getting ready to do a new one, and I kind of predicted that we're going to see interest rates settle into 5% sometime this year. And since I said that, and maybe I jinxed it, it went from 6%. I think we're up near 7% now. So what are you seeing, and what are your thoughts on where those are going?
So my thoughts in the short term, we're not going to see rates come down very much soon. I think in the next 6 to 12 months, we'll start seeing rates start to trend down. But when that happens, the market's going to become even more competitive. Yeah. So if you're in a situation where you don't want to deal with super competition, that's what I like to call it, start your process now, because you never know, like I said, when the perfect house may come up. Even if your lease, let's say in July, it doesn't hurt to get your process started now, because just a kind of side note, if you find the perfect house now and you close in June, for example, your first payment isn't until August 1st. So you wouldn't have an overlapping payment with your lease, or even if it comes down to breaking your lease, like I said, it's hard to find the right home in some situations in this market.
Yeah, it's really difficult to time the market, and especially with interest rates, we just don't know. Again, I made a prediction, and who knows where that's gonna be. But the low inventory, for sure, we're seeing multiple offers already. Technically now we're into March, but it seems like it gets earlier and earlier every year. We're in February and we're hearing about multiple offer situations because, in Anne Arundel County, there's less than 500 homes for sale, which in, just 2 or 3 years ago, there was 3 times that much, and it was a low inventory market. So depending on what these rates do, I think it's going to have a big impact on the demand for housing. I mean, we've already seen a slowdown. You know, with fewer homes available, there's just fewer to go around. So just the supply is going to be low. It's just going to be the demand of whether or not people are willing to take on those interest rates. But, you know, what's up must come down.
Yeah.
You know, it just means on the other side of this, we'll see another boom for refinances. Until then, you just kind of, you run the numbers and you make sure you're comfortable with what that payment is and you can afford it. It's not going to go up, but if it does, those rates come down, you can refinance and reduce your payment. So let's talk about the changes in PMI, which is another big change, which is going to affect your monthly payment in a positive way, right?
Absolutely. So recently, FHA reduced their PMI by 0.3% each month. So it went from 0.85 to 0.55.
Let's define what PMI is, just in case anybody doesn't know what PMI stands for.
So it's basically the mortgage insurance on any type of loan when you're putting down less than 20%. So some loan products have it monthly, some of them have it a lump sum in the beginning of the loan, and FHA has both. So just to give you an example.
The common misconception is that you have to put down 20% to purchase a home, when in reality, most of these products, you know, it's as little as 3%, 3.5%, 5%. Anything over that, getting you closer to that 20% is going to eliminate that PMI, that mortgage insurance. And we're talking about FHA conventional, there's several loan products, but with FHA, that PMI never goes away, right?
Correct.
But with conventional, once you reach that amount of equity, you get that 20%, you can get rid of the PMI. So let's talk about the changes then.
So like I said, the big change would be from it going from 0.85% to 0.55% a month. So that little bit of savings may seem like a little bit, but just to give you a quick math equation, I mean, if you're buying a $400,000 house, you're going to save over $100 in PMI. Those little things add up, obviously, with interest rates all over the place right now. You know, any little bit of savings help. The other thing James mentioned, conventional compared to FHA, is conventional is also making changes, and they're not necessarily in favor of the borrower like FHA. So in a lot of cases prior to now, where we would say conventional makes more sense for this client, we're actually seeing FHA make more sense. So if you're a listing agent watching this video, be more lenient with FHA offers, because it's all the same appraisers appraising the house, to be honest with you.
Be prepared, we're going to see more FHA offers coming through. And that's good for buyers. And FHA is a government-backed loan, solid product, right?
I mean, the major difference is sometimes the appraiser will mark for small fixes on an FHA loan to, you know, meet FHA's requirements. But it's nothing ever serious as far as my experience. If it is something serious wrong with the house, more than likely it would come up on conventional FHA, VA, USDA, any type of loan. There's no hiding stuff because it's FHA or conventional. So FHA, if it's missing a handrail on steps or there's some chipping paint, little stuff like that have to get taken care of. And on conventional, broken glass,
panels, things like that. Obvious things. They're not inspectors. They're not going to spend hours and hours going through every nook and cranny of the houses. But if they see major items like that missing, it's basically a checklist, and the seller's going to have to repair those for that loan to be able to go through, right?
Absolutely.
All right, anything else you want to share with everybody? Or,
you know, like we started off this video is be prepared. You know, we recently had a client reach out to us who found the perfect house, and I kind of said the story before, but it was on a Sunday at 3 o'clock. They found the perfect house. They called me and they said, hey, our agent said offers are due at 6. I said, did you do the application? No. We'll do it right now. They did the application, and sure enough, there was something holding them back, so they couldn't write the offer, and they were a little disappointed they missed the opportunity on that house. But short little bit after that, they finished the application, they got everything in line, and they found their actual perfect dream house, and they got under contract. So
it's funny how often that happens, where, you know, the next best thing is just right around the corner, and it was, you know, it was meant to be. So stay positive in this market. If you're looking to buy a home, I'd love to help you out. If you need a loan, how can they get a hold of you, Armen?
You can get a hold of me at armen@coastlinemortgage.com, or my phone number 443-306-8746, or basically just Google Armen the Lender and you'll find various different ways to get a hold of me.
All over Facebook. All right. Thanks again, everyone, so much for watching. If you have questions, leave a comment or reach out to us. Until next time, see you again soon.